Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
I'm not saying anything too surprising here, but as oil goes, so goes the market right now. When oil stabilizes post-Iran strikes, the markets will look back at the economy and let the economy, earnings, product, inflation, Federal Reserve drive the market. The VIX is sitting right around 25 right now, which is close to fearful levels. 28 to 40 is where investors start to panic. 40, it's good panic, and that's usually a buying opportunity. 28 is too soon. The S&P 500 is bounced back and forth today between positive and negative. It's down 0.33% right now. The NASDAQ as well was in the green earlier. Now it's down fractionally. Russell 2000 is down 0.4%. Some are starting to say with the price of oil being stubbornly high still, even after the IEA did release oil into the market, or it's planning to release oil into the market in Saudi Arabia, Aramco is starting to use another route to route oil instead of through the Strait of Hormuz. Did I get the Dow? There it is. Down roughly 90 basis points, almost 1%, sitting at 47,292. Oil up 3.6% to 88.40 a barrel. Natural gas up 4.6%. Gold and silver both lower, as the oil story is making the dollar stronger, which plays into a different direction than gold. Nvidia is up today 0.33%. Oracle's up 10%. I guess Oracle is the big story that we should be focusing on. I shouldn't say that because I know. The two stories of the day are the IEA agrees to make 400 million barrels of oil from their emergency reserves available to the market to address disruptions. Solid earning out of Oracle has created some gains across the mega cap and tech names. Oracle up 10%. Stocks are off to a choppy start this week as we hit the midweek. Chopping broccoli. Domestic economic data flow will pick up considerably over the next 2 days. The market received the February CPI report this morning, which was free of a major surprise as total CPI increased 0.3% month over month in February and was up 2.4% year over year. Core CPI, which excludes food and energy, increased 0.2% month over month and was up 2.5% year over year. So just remember, with the inflation, it's starting to come in where the Fed wants it to, but we still saw gains in inflation that aren't given back. It's just on a year-over-year basis, they're not continuing to be as hot. The lack of a surprise on the CPI is good news for the market. It's well aware that the reading from March will likely be hot given the recent surge in energy prices. Software seems to have settled down a bit. That's another good thing to be looking at in the sense of it was driving the market lower essentially from October through February as a sector. The S&P 500 remains within 3% of its record high. The software sector has declined roughly 25%. It's a big drawdown, one of the biggest in the last 2 decades as far as a technology subsector. There's a conference going on called Future Proof, where Dan Ives with Wedbush is saying that the ongoing software weakness is the most disconnected trade he's ever seen in 15 to 20 years. He thinks it's overblown. He thinks it's time to pick up some names. He's suggesting Salesforce, ServiceNow, and CrowdStrike. Taking a look at the year to date, crude oil's up 40%, silver up 25%, gold up 21%. Morgan Stanley Country Index All World up 1/3 of 1%. Russell 2000 up 1.5%. The Dow, S&P 500, and the NASDAQ are all down between 1% and 2%. The trend that is obvious is that oil trading continues to rule the market with a 4% jump in U.S. crude prices on reports of cargo ships being attacked off Iran's coast, putting pressure on stocks. The news is buzzing this morning. It's a little buzz on, buzz off, buzz on, buzz off. And the markets are positive, negative, positive, negative. But really close to all-time highs. Oracle's earnings show that AI bets are beginning to pay off. The software company reassured investors, wary of the debt that it's taken on to create AI data centers, reported better than expected quarterly cloud revenue and rosy future projections. Revenue increased 22% year over year in the quarter. That's amazing. That's huge. For a company that big, that's huge. Revenue in the infrastructure business was up 84%. JP Morgan upgraded Oracle to buy from hold, saying the company is all set to roll. Oracle reassured us the AI build-out is going smoothly, thus giving us an encouraging long-term growth outlook. Results marked a strong rebound after shares sold off following the company's second quarter report back in December. Oracle reaffirmed its 2026 CapEx guidance of $50 billion, alleviating fears that the AI data center build-out would require additional near-term spending after the company raised its CapEx outlook by $15 billion last quarter. Now, that's positive and negative for the big overall AI trade. In the last 2 years, you've seen Microsoft, Amazon, Google, and Meta say, you know what, we're going to spend more on CapEx. And in the initial rounds of that, NVIDIA was the huge winner. Oracle also pushed back on the software as a service apocalypse narrative, arguing that while some smaller SaaS firms may face disruption from the AI-driven development tools, Oracle believes its broad enterprise platform position is well set to benefit from AI adoption rather than be threatened by it. Oracle issued 2027 revenue target of about $90 billion, stronger than expected. Pretty positive report. It's been a rough 2026 for Oracle. Shares were down more than 20% since the start of the year. Investors have viewed Oracle as the poster child of AI CapEx excess. It's been stained by that negative sentiment around OpenAI. Oracle over-delivered. Netflix is getting some love today. Evercore ISI stays bullish on Netflix, citing localized content, tiered strategy, and growth levers. Mark Mahaney offered a quote. He said, "We reiterate our outperform rating and $115 price target following the detailed U.S. and Japan survey work. We continue to view Netflix as a high-quality asset in global streaming, supported by unmatched global scale, a proven and increasingly localized content production engine, and a differentiated product strategy spanning premium, ad-supported, live, and gaming. Survey results on Netflix shows robust engagement, content leadership, and improving monetization, with a backdrop across both mature U.S. and underpenetrated Japan markets. Validating management's long-term strategy around local language production, pricing power, and tiered offerings. With multiple growth and margin levers still in motion and a structural advantage for competitive positioning, we remain constructive and view shares as reasonably attractive. Approximately 20% upside from current levels. Having trouble staying awake? You may need a Monster beverage today. Jefferies says recent dip in Monster. The stock, MNST, offers an entry point as the energy drink category growth continues. Shares are up 11% off February highs and trade at 29 times 2027 earnings. Higher gas prices, Red Bull share gains, and geopolitical uncertainty create near-term noise. But long-term fundamentals remain intact. The U.S. energy category continues to grow. Food service unlocks a new growth avenue, and international affordable should drive incremental upside. Pullback in the stock is an opportunity to buy. They're reiterating a buy rating on it. Goldman Sachs has cut coal's price to $13 from $15. Kept its sell rating on the shares. Baird reduced its price target to $20 from $24, saying improvements will take time. Shares have plunged over the last month. It's not a stock I follow. I see it a lot, but I don't really follow it. Nike was upgraded to buy from hold at Barclays. Price target goes up from $64 to $73. They're believing at Barclays that the worst of the tariff risks are behind the China-exposed retailer. Management's progress in inventory management and focus on margin stabilization provides a solid foundation for a more constructive investment thesis. Stock you want to own? Nike. It's been a massive sideways performer. It's not making you broke, but it's not making you rich either. AeroVironment delivered an awful quarter. Shares are down 10%. The maker of military drones and other equipment seems like it should be hitting on all cylinders right now. It's not. KeyBank cut its price target to $295 from $330. Revenue surged 143% year over year, driven by the integration of Blue Halo and continued to strengthen its unmanned systems demand. But the top line still missed expectations due to order timing shifts and adjustments within the space business. The autonomous systems segment generated the majority of the revenue, about 68%, supported by continued demand for products such as the Switchblade, loitering munitions, Puma, and the P550 UAS platforms. The report represents a near-term reset rather than a deterioration in underlying demand, in my opinion. U.S. government shutdown pushed several expected orders to later periods, creating a temporary mismatch between investor expectations and reported results. Strong bookings, a growing of $1.1 billion funded backlog, and continued demand for autonomous systems such as Switchblade and jump drones suggest the company still has significant growth drivers ahead. Current sell-off appears tied more to short-term execution and timing concerns than the weakening demand in AeroVironment's core defense market. Ticker symbol on that one is AVAV. Come meet me tonight in Lafayette, 6:30 to 8:30 at the Lafayette Library. You need to sign up at robblackshow.com. It's robblackshow.com. It's a wealth preservation retirement planning seminar with Stephanie Richman and Nathan Rogers. It's a good opportunity for you to get in and learn what you're doing right, what you're doing wrong in your financial planning for retirement. It's ideal for people with $500,000 or more who are 50 plus heading towards retirement. You'll get a preliminary plan at the end of the event. Schedule a time to upload some documents through a secure link. Find out how much you're going to have when you're 92 years old in a best case scenario, a normalized scenario, and a worst case scenario, as well as an overview of what you're holding and maybe what you're missing in your portfolio of financial products. What financial products are good, what financial products are bad. Sign up right now. It's tonight, Wednesday, March 11th, 6:30 to 8:30. We still have a few spots left. Sign up at robblackshow.com. That's robblackshow.com. More coming up. Next segment.
These days, retirement planning is more complicated than ever. So set aside Wednesday evening, March 11th, and get ready to learn some strategies for navigating wealth in uncertain times from Stephanie Richman, Rob Black, and Nathan Rogers. This event will focus on retirement income, tax strategies, estate planning, and tax planning. If you're at or near retirement with at least $500K in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves, Social Security strategies, and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. That's Wednesday, March 11th, 6:30 p.m. at the Lafayette Library in Lafayette. Space is limited, so sign up today at robblackshow.com. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.
I always start segment 2 by looking back at where the market's gone in the last hour. The VIX is still sitting right around 26. There's not a lot of volatility. Oil has moved a little bit higher, now up 4.4% to $89, even though the IEA has released 400 million barrels of oil, the largest release strategically ever. The S&P 500 is extending some losses, down 0.4%, but it's still very composed, down 26 points to 67.54. The Dow Jones Industrial Average is down 1 percentage point, down 171 points. So it's sitting at 47,235. The NASDAQ is down 0.1%, down 42 points, sitting at 22,654. The NASDAQ should get a big push next week if NVIDIA releases a new chip on Monday at the GDC conference. It's weird how that plays out. It's almost too obvious. Maybe the fact that it's obvious is a problem. Guggenheim lowered their price target on Accenture to $275 from $305. They kept their buy rating on the shares. They're pointing to an industry-wide multiple compression for its reduced price target. Guggenheim expects management to raise the low end of its fiscal year 2026 guidance while maintaining the high end. Accenture is one of those companies that will likely face AI disruption. Citi hiked its price target on Johnson & Johnson to $274 from $250, kept a buy rating. Analysts said fundamentals for the medical technology sector remained healthy despite recent volatility after quarterly earnings. Intuitive Surgical was upgraded to buy from hold as part of that Johnson & Johnson upgrade. Analysts say $590 price target. Company's well positioned for double-digit sales growth. I'm getting to that age where I may need to have an Intuitive Surgical. My heart might blow up, right? J.M. Smucker. They make jams and much, much more. Upgraded to a buy over at Bernstein. Price target goes from 121 to 145. Activist investor Elliott Management took a stake in the company. May lead to positive portfolio changes for the company, who has Folgers and other products. Cintas, they make uniforms. They're one of those companies. They don't make uniforms. They sell uniforms to restaurants, cafeterias, and they come pick them up daily and clean them and bring new ones. So you wouldn't want to see your fry cook, in his clothes after 5 days of not washing them. So they do that for a business. And it's typically a sign, as Cintas stock is doing, it shows you where the economy is going, if people are eating out and or not. So they acquired a smaller rival called UniFirst for $5.5 billion in cash and stock. They've been trying to buy that company for years. ExxonMobil saying goodbye to New Jersey for Texas. It's North America's biggest oil company. They sit in a regulatory filing that they want to move its legal home from the land of Taylor Ham, where it's been based since 1882. It was called Standard Oil back then. They want to move it to Texas, which makes a little more sense. It's a more pro-business friendly environment. And the filing said that the move would protect the company and its directors from future frivolous litigation. Shareholders will vote on that move in May. States need to do a good job of being business friendly. Otherwise, businesses will move to Texas. Meta acquired AI agent social network Moltbook for an undisclosed sum. What's interesting here is a lot of people are saying WTF. Zuckerberg looks at the world from an advertising network that drives all of Meta's revenues and profits. Advertising needs one thing to be highly profitable, which is distribution. Moltbook, by having a social network running on OpenClaw, has exactly that, a social network for AI agents. It's goofy. It's meant for AI agents, but not humans for posting. Zuck believes there are a finite number of different social mechanics to invent. Moltbook has invented one. He doesn't care if 50% of Moltbook was prompted by users. That's a large number of accounts that were faked are also irrelevant. There's kind of a weird gravity to this being visionary and or colossally stupid. CarMax is rising after activist investor Starboard takes a $350 million stake. Starboard nominated 2 directors to CarMax's board, including its own CEO Jeff Smith and Front Door CEO Bill Cobb. Starboard believes that CarMax can improve performance by adopting more dynamic pricing, reconditioning vehicles more efficiently, and reducing administration and other costs by more than $300 million. A Pokemon game similar to Animal Crossing is selling out at U.S. retailers. That's helping Nintendo shares go higher. I like Nintendo a lot as a stock. It's just got a unique brand of entertainment. and they have a Super Mario's movie coming out in, I think, May. Could be April, but I think it's May. Pokemon Pokopia, a Switch 2 exclusive game in the vein of Animal Crossing, has become something of a sleeper hit for Nintendo. The stock closed up 8% in Japan on Wednesday. US ADRs are up 5% on the news. Physical editions of Pokopia, I'm saying it wrong, I know, Pokopia, are currently out of stock on Walmart's website. They've temporarily hiked the price of the game to $80 as demand has surged. Pokopia falls into a category of cozy games that have become a major industry category. Animal Crossing is the second most popular title on the original Switch. It sold over 49 million copies. There's a game called Stardew Valley that sold more than 50 million copies across consoles and PCs. The Switch 2 is seeing a momentum boost from the Pokemon exclusive. Jefferies analyst Atul Goyal wrote in a recent note that's helping to offset investor fears around the growing issue of memory prices. The Switch 2 is a massive hit. The PlayStation 5 is still a really good hit. The Xbox Series X, not so much. Uber's jumping higher today. It's going to offer rides in Amazon-owned Zoox autonomous vehicles on its platform in Las Vegas later this summer and Los Angeles in the middle of next year. Zoox is currently testing in 10 U.S. markets where it's available to public in Las Vegas and select users in the Bay Area. Uber also announced a partnership with Serve Robotics, ticker symbol SERV, and White Castle today to deliver food in Serve's autonomous sidewalk robots. I'm not really sure where White Castle is. I've seen these Serve Robotics little robots in Palo Alto. I might be there for a business lunch, for instance. And these little robots kind of truck up and down the highway, the sidewalk. And no one kicks them and no one gives them trouble. I always thought that was going to be a problem with autonomous delivery. Tesla accelerates AI agent push as xAI's macro hard is faltering. Elon Musk's Tesla seems to be accelerating its own AI agent project dubbed Digital Optimus. It's meant to perform tasks on a computer much like the Optimus robot would in the real world. Unlike MacroHard's screenshot-based training approach, Tesla's effort reportedly mirrors its full self-driving system, processing information in real time rather than step-by-step. It's really getting all blurry. SpaceX has merged with xAI, and now Tesla appears to be absorbing one of xAI's most ambitious projects, with some of MacroHard's work and computing resources reportedly shifting to Tesla's autopilot team. Bill Ackman, he's a hedge fund called Pershing Square. They filed to raise $5 to $10 billion in an IPO. Ackman won't give up his chase for permanent capital and the retail investors who could help him build a next-generation Berkshire Hathaway. He's had some failures trying to expand his empire in the past. In 2024, he had talks to raise $25 billion for an IPO for Pershing's closed-end fund, but the effort ultimately failed after investors feared that it would trade at a discount, as closed-end funds often do. Ackman's plan involves a combined offering for the hedge fund manager and a newly closed-end fund. Proceeds raised through the IPO would go to the closed-end fund. He beats the market. He wants to be a Warren Buffett, Berkshire Hathaway type of company. Meta is announcing 4 new chips raising competitive stakes with NVIDIA and AMD. These chips are not creatively named, but the MTIA 300, the MTIA 400, the MTI 450, and the MTI 500 are designed to focus on different elements of Meta's AI business, including its ranking and recommendations models up to high-end inferencing. The MTIA 400 is meant for generative AI as well as R&R processes. It can be strung together in a larger server rack with 72 chips. It's a similar idea to NVIDIA's NVL72 or AMD's Helios racks. Hyperscalers don't show any signs of slowing down their spending on AI data centers or third-party chips. In 2026, Amazon, Google, Meta, Microsoft plan to collectively spend about $650 billion in capital expenditures, with the bulk of the effort going towards AI. This slowly starts creating a potential headwind for NVIDIA and AMD. NVIDIA CFO CFO Colette Kress reported that slightly more than 50% of the company's data center revenue was attributable to hyperscalers. Taco Bell did something very Taco Bell, and showing you the future of marketing. They get it. They do a really nice job. They had their third annual Live Moss Live event, streaming on NBC's Peacock, marking a new approach for the chain. The fast food giant Taco Bell, known for experimenting, the Baja Blast Pie, hosted a variety show in Hollywood to unveil over 20 new menu items. The event had a rapper, Vince Staples. It included awards, a game show, and appearances from Benson Boone, Demi Lovato, Fernando Mendoza, Ariana Madix, Anderson .Paak, and Lil Jon. Most iconic brands in the world, they get the big picture, really starting to behave like entertainment companies and getting viral streams going. On this day in 1891, a patent was granted for an automated system that let telephone callers connect directly, eliminating the need for human switchboard operators. The inventor was a Kansas City undertaker, Almond Brown Stroger. Had a very human motive. He was convinced operators were deliberately routing his prospective customers to a rival funeral home. A little bit morbid, but that's sometimes how businesses get done. Qatari-backed fund is bidding $1.5 billion to buy pizza. Papa John's, ticker symbol PZZA. Microsoft has announced new agents for modernization that are built to scale and designed for control. A lot of headlines out there. Some of them are PR, and some of them are important to watch. McDonald's is going to launch a new lower price menu. What's that all about? For budget-minded diners for $3 or less. That's pretty insane. They're also readying a $4 breakfast meal deal. The lower part of the K on our K-shaped economy. Rivals are starting to sharpen their own efforts. Panera Bread, they've never had a value menu. They announced a $4.99 mix and match promotion last month. Domino's Pizza have deals like a $9.99 pizza of any style with any toppings, trying to capture customers from competitors. How low can they go? I didn't even know there was that much wiggle room. NVIDIA's announced Nemotron 3 Super, delivering 5 times the higher throughput for agentic AI. It's a new open 120 billion parameter hybrid mixture of experts models optimized for NVIDIA Blackwell, addressing the cost of long thinking and context explosion that's slow autonomous agent workflows. It is crazy the amount of technology exploding in AI, the amount of research. NVIDIA's got a great team. Great set of researchers and developers and scientists, if you will. Don't forget, you can come out tonight, Lafayette Library, but you have to sign up at robblackshow.com. It's robblackshow.com. It's my only event happening now for the rest of the year in the East Bay. It's in Lafayette. I'm going to get there right around 5:15, 5:30. It doesn't start till 6:30, so if you want to hem and haw and chit-chat, it's a great location. You can sign up for the event at robblackshow.com. It's robblackshow.com. It's Lafayette Library. It's a wealth preservation retirement planning event. I love doing these events, and Chad does the events on the peninsula, so we're opening up the events to Stephanie Richman and Nathan Rogers. They're going to be presenting tonight, so it's new content for you, I'm sure. It's an in-person event to better understand the markets, but also to understand how the headlines work in your long-term financial plan, what products you have that are doing well, what products you may be missing. They'll give you a preliminary plan at the end of the event where you'll set up a time to chat with them, and they'll do a Zoom call with you or meet with you in their offices and literally give you a preliminary plan. It's quite a deal. Sign up at robblackshow.com. It's robblackshow.com.
Retirement planning is more complicated than ever, and it can be hard to even know where to begin. So set aside March 11th, Wednesday evening, 6:30 p.m., and get ready to learn some strategies from Stephanie Richman, Rob Black, and Nathan Rogers that can help you retire better and pass on your estate while navigating wealth in uncertain times. That's March 11th at the Lafayette Library in Lafayette. The event runs from 6:30 to 8:30 and will focus on retirement income, tax strategies, estate planning, and tax planning. If you're nearing or you're now in retirement and have at least $500,000 in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves. Also, Social Security strategies and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. Navigating wealth in uncertain times is appropriate for individuals with at least $500,000 and either in or heading to retirement. Wednesday, March 11th, 6:30 to 8:30 at the Lafayette Library in Lafayette. Sign up for the event at robblackshow.com.
Historically, 75% of the time, 1 year after a war, since World War II, all wars, the stock market has been higher 1 year later. Nicely higher. So we got to breathe in, breathe out, and go with it. Today, though, just because we're releasing oil, I want to give you on both hands. I know you're saying, cut off one hand, because I want the direct answer. Nope. President Trump warned of unprecedented military action if Iran doesn't remove potential mines in the Strait of Hormuz. Says removal would be a step in the right direction. Now, again, he does this on Truth Social. This is the strangest war conflict I've ever seen with the United States because a lot of the diplomacy is being handled with tweets. Campbell's soup. Do you like Campbell's soup or is it too salty? Is it too weird? Is it a throwback to your mom and dad? How do you feel about Campbell's soup? I want you to take a quick second. You've seen it in the stores, right? You've gone to Safeway, you've gone to the grocery store, and you're like, oh, that's Campbell's soup. So you know what I'm talking about. I know you do. It's publicly traded. Ticker symbol is CPB. Taking a look at the chart of the company, it's not doing great. So you could invest in a soup company. It's a new 52-week low. They report earnings soon. Something tells me when you're at a 52-week low and the market's at an almost all-time high, let's throw that one away. It's almost like saying, okay, you're at an all-time high in your earnings. You're at an all-time high in your home value. You're at an all-time high in your 401k value. Let's get back together with that girlfriend who was a little dingy, a little crazy, who you had to call the police on because she snuck back into your house. Let's not do that.
Good.
Stay away from Campbell's soup, at least for now. Now, again, if you like bottom feeding, that's fine. I don't like the taste of catfish. I don't like looking at catfish. I find it to be a nasty, horrible animal. Dolphin is different. Dolphin I love. Dolphin's delicious. But catfish, to me, is a bottom feeder. It stays on the bottom of a lake. It's gross. So have some standards. Maybe Campbell soup isn't for you. Fair Isaac was a horrible performer recently. Losses due in part to a Stiefel note suggesting new lower price Vantage score 4.0 undercuts FICO's $10 mortgage score, pressuring near-term revenue and weighing on the stock. So Fair Isaac is publicly traded. Pretty good company, in my opinion. I want nothing to do with it because they're in a price war. And stay with me here for a second, but I once saw an opera. I know you're saying, didn't Timothy Chalamet just trash operas? Yes. I think it was called The Civil War. And it might have been Philip Glass. And it was horrible. It was awful. It was embarrassingly bad. But General Grant or General Lee, one of them would sing, "Nobody wins. It's a horrible war." And I'm like, no. See, I want nothing to do with civil wars. Either the opera or when stocks get into a business product war with another on price. Don't like it. Next up, Amazon launched Health AI Agent on Amazon website and app with free 24/7 access to virtual care for Prime members. You know that Prime, oh boy, is it pricey. But oh boy, does the Amazon truck come to my home typically 3 times a week. I've begged my spouse, please, please, please give me love. No, that's not what I begged her. Please, please, please. Consider getting our Amazon packages on one day instead of whenever you get a whim. A, I think it's rude to the driver. B, I think it's rude to our planet. And C, I just think it's going to run cost higher to have all those deliveries. But anyway, Amazon launched Health AI Agent on Amazon website and the app with free 24/7 access to virtual care for Prime members. I was just telling a friend of mine in media, he works in radio. I said, okay, yeah, you got a house worth north of $1 million. You've got a 401k. It's probably not as robust as it should be, but you also have some Social Security and you have a spouse and she's got some of that social. There's some assets there. But the most expensive thing in your retirement might end up being healthcare. I am open-minded about healthcare. I've used Amazon's healthcare agent before, and I've used their services to get some drugs because drugs are bad. Okay. So I've used it, and it's not that bad. It's pretty easy. It's way easier than going to my primary care doctor. Way easier. So Amazon's new Health AI Agent can provide personalized health insights and guidance, as well as take meaningful action, including booking appointments and managing prescriptions to help you stay and get healthier. Eligible Prime members using Health AI get free direct message care visits with a one medical provider for any of 30 common conditions. Now, these conditions are like erectile dysfunction, hair loss, and others. I'm just going to stay with erectile dysfunction and hair loss because that may be what I'm. Doctor, I need help.
That's terrible.
It's not terrible, but it could be other illnesses later in life as we age. I think Amazon's in the right place. Still one of my favorite stocks to accumulate. As we all get older, I had to tell a listener, I'm like, I think you should consider moving out of state because his assets are about $500,000. He can't really work for the next 15 years. I was like, consider moving out of the state. Like, start cutting your costs now. And instead of thinking you're going to have a primary care physician in retirement, maybe think it might be an Amazon that comes with your Amazon Prime. I understand. Let me be the judge of that. Nice thing about what I do is I work with financial planners, and we actually do scans for who the best healthcare provider is in retirement. You can come talk about it Wednesday evening, 6:30 to 8:30 in Lafayette. Sign up for the event tonight. Well, it's tomorrow night, but sign up now at robblackshow.com. It's the only time I'm going to be on the East Bay this year. That's it. Done. So Lafayette tomorrow night, 6:30 to 8:30, Wealth Preservation Retirement Planning event. Salesforce is considering doing a $20 to $25 billion bond sale to fund buybacks. Okay, I got some issues with that. They're probably going to be borrowing money around 3%. They think they're going to get a better return over time than 3%. They're taking on debt that they think they can service with their cash flow. But it's a little financial engineering. I'm not against it. I wish Mark Benioff would say, I'm really, really sorry about that tasteless joke that I told to all my employees about ICE. That needs to be addressed as well. But borrowing money to buy back shares, I don't know about that. HSBC has moved to max overweight stocks. This is a big brokerage firm. They've got many brokers, a little army of buyers and sellers, if you will. They've told their brokers max overweight stocks, saying peak fear about Iran oil spike has passed. It's time for investors to take their stock exposure up to the max now that the worst fears about the Iran oil spike are behind. Yesterday's price action is indicative of peak fear to us, with some of our positioning indicators flashing pandemic-type signs. So says Chief Multi-Asset Strategist, HSBC, Max Kettner. Not a big fan of the name Max. Don't know why, but I'm not a big fan of the name Max. He says, quote, we are now max overweight equities and fade the moves from the last few days. Okay. I agree. If nothing else, I think the last few days has shown you the market is ready to go higher based on the U.S. economy, based on inflation expectations, based on the Federal Reserve movements in the back half of 2026, based on productivity numbers. There's a lot. Now, here's a negative. As long as oil stays stubbornly high, it's going to vampirically suck some of the positives out of the one big beautiful bill. Now, the one big beautiful bill was one big beautiful expense, and it upped our deficit aggressively. In theory, it was going to give money back to the middle class and the lower class. The downside is gasoline is sucking some of that away. HSBC's Max Kettner is confident the recent bout of panic selling since the start of the U.S.-Iran war will eventually go the same way as the market did during the COVID-19 pandemic. Okay. He could have said the April tariff announcement. There's a lot of things where we panic. Shoot first, ask questions later. Deutsche Bank upgraded software stocks. They see no evidence of negative impacts from AI on sales this year. Should you buy IGV? Should you buy the ETF that's tied towards software? Another bullish call, this one from Deutsche Bank. They're betting that the nascent turnaround in software stocks is just getting started. Again, tied towards Salesforce.com as well, saying we want to borrow money because we think our stock is undervalued. U.S. software companies' earnings were up 29% in the fourth quarter. Expectations for 2026 earnings have been revised up. Asking various experts, generally speaking, Gemini, ChatGPT, and Claude have all still not come across a single software company that expects a negative revenue effect from AI in 2026. The way to broadly play it would be IGV. The way to play it aggressively would be something like to buy Salesforce, ticker symbol CRM. Or Workday, ticker symbol WDAY. Workday's sales growth is constrained by the lack of meaningful increase in users. Constraining means what? What's a meaningful increase? Deutsche's analysts have some technicals to help support their fundamental case. The shares of software stocks are trading above their 50-day moving average right now. Interesting times. You can always find me online at robblackshow.com. That's robblackshow.com. I have an event evening, 6:30 to 8:30. I'll be there around 5:30. It is a wealth preservation retirement planning event. You can sign up for it at robblackshow.com. It's just going to be 4 of us. We're going to talk financial planning, wealth preservation, retirement planning, what to do in volatile markets. So you're going to have good access to experts. You can sign up at robblackshow.com. After the event, you do get a preliminary plan, which means we're going to share information. And we're going to upload your information, tell you how much your Monte Carlo score looks like, tell you what products you've got wrong and what products you might have, and some ideas on what you could be doing better for your financial plan going forward in the future. Last event on the East Bay, you can sign up for it right now. It's 6:30 to 8:30. All questions will be answered. Sign up at robblackshow.com. That's robblackshow.com.
These days, retirement planning is more complicated than ever. So set aside Wednesday evening, March 11th, and get ready to learn some strategies for navigating wealth in uncertain times from Stephanie Richman, Rob Black, and Nathan Rogers. This event will focus on retirement income, tax strategies, estate planning, and tax planning. If you're at or near retirement with at least $500K in investable assets, this seminar is for you. Stephanie will explain how to transition your portfolio from the accumulation phase to the income phase, which accounts to draw from first, how to protect your estate from long-term care costs, and much more. Learn how to invest during inflation and interest rate moves, Social Security strategies, and managing IRAs and 401ks in retirement. Rob Black will share market happenings and trends. That's Wednesday, March 11th, 6:30 p.m. at the Lafayette Library in Lafayette. Space is limited, so sign up today at robblackshow.com. That's robblackshow.com. Investments not FDIC insured. Past performance does not guarantee future results. Not an offer to sell or a solicitation to buy any security. Member FINRA SIPC.